Video 3, Ultimate Traders on Reddit. Nathan from Queens, Labor Day, September 5th, 2022. The state of the market. Boy, whoever's not listening to me, whoever's not following me, whoever's not reading my Reddit, I feel sorry for you. Once again, I am a trader. I'm not an entertainer. I'm not going to wear a suit. I'm not going to make my background really nice. I don't care. You know what? I really don't care. Even if someone was to tell me, hey, you could do this, you could do that, you can make a couple of thousand on YouTube, I'm not interested. And honestly, I don't care if you like this video. I don't care if you upvote me on Reddit. I don't care if you do the same on Twitter, follow me or not. I don't care. Follow a bum on Twitter that doesn't know nothing about trading and makes no money. I don't care. I'm not getting paid. If I can get paid $10,000 a month for making videos or even trading live on Twitch, that's different. But I'm not going to work hard to do that. I'd rather make money trading. And if big money sees what I can do, then boom, they give me an opportunity to make real money, like $500,000 a year for year one. And then year two, after year one, let's see. Because if you watch my videos, if you're seeing what I'm saying, you understand why I truly believe I should be a billionaire. It's not even about the money to me, but I should anyway. The reason why I'm even saying that is because if you watched anything, when the market was skying high, it hit 10,500 mid-June. Right now it's September 5th. It hit 10,500 mid-June. We got our first 0.7 rate hike, which is bad. We took off like a rocket on the Nasdaq and the S&P. I think S&P low was like 36, 37. I went to 4,200. The Nasdaq 10,500. They're 13,300 and change on bad news. It just went straight up. We had bad earnings. Bad, not even okay, not terrible, but bad earnings. Big companies, everyone was missing. I did videos on this. I did posts on this. Finally, what the funny thing is, on CNBC this week, finally, two guests finally admitted what I didn't understand before. So what I didn't understand before, they were causing FOMO, they were pumping the market, trying to say earnings were good, talk about this and that, about wow, it's a lot better than it was. No, it's not better. But finally, this week, during the week, if you take a look, I think her last name is Bryn Talkington on CNBC said that Goldman Sachs is expecting the S&P 500 to earn $226 this year. Okay? I'm expecting about $220. And I wouldn't give 18 times earnings on the S&P. We're in a bear market recession. So I would give it 16. That puts us about 3,500 on the S&P. Nothing has changed with the Nasdaq yet. Right now, my safe trading range on the Nasdaq is 9,500 to 10,500. But notice, I did not switch off of that when the Nasdaq and the S&P were roofing. What's happened in the last 2 weeks, the Nasdaq has fell from 13,300 and change to 11,600 and should head lower. The S&P went to like 4,200 and change and is at 3,900 and change. And what is gonna go lower? Because September 13th CPI, September 22nd, Powell has to raise rates by 0.75. But I've been telling you guys for months, and the only reason I didn't buy a lot more puts, I am buying puts now because now, see, I'm not one of those crazy gamblers. When things aren't going my way, I don't double down and keep doubling down. Okay, because the market is the live auction on settlement. Everyone is bullish. The market keeps going up. I don't want to go against it. I still had my puts, but I don't want to double down. Things weren't working. But when the market started coming off, the last 2 weeks, like the market's coming off, I am opening puts, closing puts, and it's been awesome. But this video, because that's video 4, what I'm going to do trading this video is the state of the market. The state of the market is bad. And unfortunately, back to Brent Tarkington. Sorry about that. Goldman Sachs, 226. I'm at 220. Give it 16 times earning. We're about 3,500 S&P. That's what I'm looking at right now. But what she said that was big was that energy is like 27 stocks on the S&P 500. It accounts for less than 5% of the S&P 500. Why? Because remember, the S&P is a market-weighted index. So one company, Apple, is worth 8% of the S&P 500. So if 27 companies that account for below 5% of the S&P 500 are whacking earnings, they're the ones making most of the money. You cannot say S&P 500 is good. See, that was my problem. Because weeks ago, and if you take a look at my videos, people on CNBC are saying, wow, earnings are good. Earnings are not good. Earnings are being held up by energy and oil. You cannot say that the S&P is whacking. Our earnings are good. All the big companies, aside from Apple is the only one that did good, and it wasn't great. It was good. Microsoft missed. Google missed. Tesla just met earnings. Okay, Amazon missed. Bank of America missed. JP Morgan missed. Netflix missed. Meta missed. Apple beat, and not a huge beat. The energy and oil. So this is what I think is going to happen. We're going to get more rate hikes. CPI is going to keep going. Unfortunately, third quarter earnings kicks off on the third week of October, and I don't think we're going to have good earnings. They're not going to be bad. They're going to be on this level, like 60, which means either they meet top and miss bottom, or they miss bottom and meet top, or one or the other. Now, nothing's going to tell me it's going to be horrible and we're going to get 50s or 55. If something changes, the war happens in China, earnings could fall off a cliff, just like NVIDIA. NVIDIA was a powerhouse. That earnings was a disaster. Guidance, even worse than a disaster. Sales growth, like 5% or less, and bottom line earnings dropped 75% on NVIDIA. And then now they might not be able to do business in China. So that's terrible news. This is video 3, state of the market. It is not good. Put city for me. That's video 4 coming.